Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, Zinger Nation. Happy, what day is today? Wednesday? I'm losing track of the days now. Today is Wednesday. Happy Wednesday, everyone. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Whew, we got a lot to talk about. We're going to talk about earnings, obviously, right? Nordstrom. We had Dick's. Dick's is just drowning in cash, it looks like. We're going to talk about AMC and GameStop from yesterday. We want to talk about rocks. EtherRocks specifically, but I guess they're clip art rocks. I think the guys have some questions about the rocks. We'll talk about the rocks. Two guests on the docket today. First up at 8:35, Craig Johnson, Managing Director and Technical Market Strategist at Piper Sandler. And then at 9, we'll have Peter Tchir on the line. He is the head of macro strategy at Academy Securities. We will take questions from the chat. And we got a lot to go through, so let's get right to it. Smash that like button. Joel, how are we doing this morning in the overnight market?
Flat here. Down 3/4 of a handle. New all-time closing high, 82.50. Little over a 10-point range. Couldn't take out that intraday high from yesterday, nor could we take out the daily lows. So consolidation decision time here in the market. Crude up 40 cents at 67.94. Trying to get into that 68 handle for the first time since mid-month. Gold being gold, 1800. That's a level. It's down 1250, 1798. Silver 24. Can't get through that round number. Down 12 cents, 23.77. Bitcoin just sliding, nothing major, down 750, 47,480. Ethereum going the same way, down 91, let's call it $92 at 31.26. So where should I put my NFT rock on my wall, Dennis? Where do you think it would be?
Wherever. I don't think you can put it on your wall.
You can't?
Put it on your computer screen. Yeah, it's digital, Joel. It doesn't go on your wall. It goes on your phone, or it goes in your photos, or it goes wherever you want to go. But it goes there, and you better protect it as best you can, because apparently it's worth $1.3 million.
What are we talking about? We're talking about EtherRocks, and it says
EtherRocks.
it says it right here. It says it right here. These virtual rocks serve, all caps now, no purpose beyond being able to be bought and sold and giving you.
They didn't even spell bought right. Be brought and sold.
Oh, you're right.
Where's that? Where
is this their actual site?
Yeah.
Let's see.
Is this the actual site of the people who produced this? They didn't even spell it right.
Where's it at? Where's that at?
Brought.
Oh,
no! Is this from the actual creators of these EtherRocks? Their site.
This is it.
They can't even spell that right.
Spelling was never part of the game. Okay.
Man, I think we should stop talking.
Oh yeah,
about
I want to put all my money in this.
Oh man, I sold.
They give
offer.
you a strong sense of pride in being an owner of one of the only 100 rocks in the game. It's not like anybody else is going to create more EtherRocks. It's not like we have a whole nother chain of EtherRocks coming down the pipeline.
No, that's exactly the point. I mean, there are only yeah, they can always like drop more rocks,
Right?
right?
Think there ain't more rocks coming? I'm going to go out on a limb and say there's
No,
going to be
don't do it,
another
Dennis.
whole 100 rocks coming. Let's look at how cool these rocks go. Where's the $1.3 million one?
Wait, where's the tweet that I have? Oh, wait, you guys can't see my screen. Hold on, I have to reshare my screen. This is the one that was $500,000 from over the weekend.
Let's see. Oh, but that one has eyes.
Yeah.
That's got laser eyes. I heard laser eyes are really cool.
Yeah, they are cool.
Okay, well, then that kind of makes sense.
Oh,
that one got laser
wow.
eyes. That one took them 3 minutes to create. Where's the one?
Did little Spencer do that one, or Natalie?
What?
What?
Did little Spencer do that one? Your Spencer or Natalie?
Exactly. Who
I'm
made?
asking you.
No,
Who made
I
that?
don't know. I wish that they would, because I wouldn't be doing the radio show right now if I was selling all these rocks for $1 million a piece. No, I'm not involved in the production of EtherRocks. Sorry, and neither are my kids.
Can you? My
Dare to
big
dream.
question
Maybe
is,
one day my child will have a job creating EtherRocks.
can you skip them? Like on the water?
Joel, maybe you can skip them virtually, and that's probably $1 million idea too. Like getting a use purpose, like you can see your EtherRock has a flatter surface than the other EtherRock, so it will skip across the water, and you can see how many skips you can do. There you go. Genius ideas here again for the NFT creators out there. We got to get the games that the rocks can play. Skipping, stoning, whatever else you do with a rock. I guess you could build your virtual home from these rocks too. So maybe they do serve a purpose in the ether world. But again, I just don't know about the whole scarcity thing. They like to pawn it off that it's one of 100 scarce rocks, but we know somebody else is coming with another creation of a whole nother bunch of pet rocks.
Yeah. They're only, as I said before, these rocks, like the whole thing is a joke. It's a game. Imagine you're on the playground at recess, right? And you've come to a mutual understanding that for the moment, these rocks are cool. That's how it is today. Tomorrow, someone might decide, no, rocks aren't cool. Sticks are cool now. And now you don't need your rock is worthless. Now you got to buy a stick. It's the same thing as that. It's the same. It's this exact same social construct.
The only reason these have value is that the person's buying it for $1.3 million believes that somebody is going to buy it for $2 million tomorrow. And they absolutely may be correct.
Yeah.
At one point in time, it will drop significantly in a hurry. All of these things, and obviously they're not traded, but there's going to be at one point in time somebody stuck holding the rock, we will say, instead of holding the bag. But at one point in time, they will get stuck. I don't know at what point in time that's going to be, but I mean, we're at a point where, that's obviously, you can say that's artwork, but the Beeple thing that went for like $65 million, that person worked, I heard, years on creating that piece. It looks like these rocks were created in less than 5 minutes. So you're gonna pay $1.3 million for something that somebody created in 5 minutes, and a digital thing that I don't know. That go at it. What's that Dan Nathan say? Have at it. That's what I'm gonna say. I'm taking your words from you, Dan. Have at it. I'm out. I don't know where the top is, but I'm not putting real money, $1.3 million into a virtual rock. Sorry.
It's the same. It's not that different from the same concept as AMC and GameStop, right?
No, it's not at all. There's a lot of comparisons here. But the one thing I will say is I think AMC and GME have more value than those pet rocks. At least these are companies. So if a pet rock, a virtual rock that was created in 3 minutes, can sell for $1.3 million, why can't AMC trade with a $35 billion market cap? So we're at that world. If your stock is disconnected from fundamentals, if your virtual NFT is disconnected from any fundamental thought, I mean, those prices can go anywhere. And we've been saying this about AMC and GME. They can go anywhere. The price can go anywhere. I don't know the path. I do believe eventually these things end in tiers, but who knows the path to get there? And obviously the path is never straight down. I mean, if you shorted stocks and they only went straight down and they never had any wicked little rallies in there, it would be the easiest game in town. Shorting is not easy. There are wicked rallies like yesterday in AMC and GME. Is AMC going to $100? It could. Is it going to $200? It could. Is it going to $5? It could. I mean, it can go anywhere. I trade AMC and GME against each other as pairs because I wouldn't want to own any of them. And obviously, you can't trade them perfectly, but we talked about this on Saturday that, there is a relationship here between AMC and GME that statistical arbitrage traders and quantitative traders can take advantage of. You definitely see when AMC is a good day, GME has a good day. You can look at these two charts on top of each other, and you know what? They kind of look similar. Put them beside each other. This is, where I make my money, by the relationship between AMC and GME. Am I going to go long AMC and put in my long-term account? Never. Am I going to go long in GME and put in my long-term account? Never. I'm not going to short these things. Just naked short. It's just like everyone. No, I'm not shorting AMC because it could rip my head off. So I have no positions in these, but I sometimes do pair trade these two things together. So putting them together sometimes gives you an opportunity. Sympathy plays. There's different types of trades you can do on these stocks. But if you put those two charts on each other, there is definitely a relationship, which you can clearly see between AMC and GME. And that is exploitable.
Just a quick note. My niece's boyfriend was a rock skipping champion. They have a rock skipping championship.
You got to see if they can skip the NFT rocks, because normal rocks, Joel, are not cool. Only NFT rocks are cool now. Listen to Spencer's schoolyard theory. Right now, if you're picking up a rock on the schoolyard, that's not cool. You've got to pull out your iPhone and look at your rocks on your computer, because that is what is cool right now. Just dropped my phone. It broke probably.
Okay.
Next.
All right, let's go. People are getting sick of these stocks.
We have to go on a rant here.
Yeah,
Bottom
of course.
line, I have no idea the path of AMC and GME. I thought I was bearish at 20. I was bearish at 30. I was bearish at 40. I was bearish at 70. I was bearish at 60, 50, 40, 30. So now I'm still thinking I don't want to put my money in it. Does that mean it can go to it's going to go straight down to 20 or $10? Obviously not. Is it going to go to 70 or 100? It could. I'm not putting my money where my mouth is because I have no idea. It's random walk theory in AMC.
How many people are like half paying attention and are waking up this morning and they say, "Oh my gosh, AMC was up to $40 to almost $50 yesterday. Let me get in right now." I don't know. Maybe.
Hey, Dennis, should you give away the secret sauce here? Lord Jam is asking how you pair them. Do you want to give away the secret sauce?
Well, if you're pair trading something, it means you're buying one short and the other. But I'm just saying, I trade a more sympathy style.
Yeah, exactly.
So, and I had when the short squeeze stock started, remember 3 months ago?
Yep,
you could see Bed Bath & Beyond blast off. And what did I do? I went and bought like 25 of that short squeeze stock list.
Yeah.
The Bed Bath & Beyond was the
How'd you hedge that one, Dennis?
I went Workhorse, Clover, all of those. And like I said, on the Workhorse, I made I think it was like 25 or 30% in 30 minutes. And I took it. And then the Workhorse goes up like 100% the next day, and I felt like an idiot. So I take the first few bites, because I recognized it faster than most people. But I got out way too soon. So, and that's what I always do. I always get out way too soon. But you're just exploiting the relationship between the two stocks. If GME started to roll over, I probably would try a short on AMC short term. Am I hold it in the long-term account? No. And if I'm wrong, I'm going to stop myself out. Whenever you're shorting a stock, don't let it get away from you, because it can really get ugly in a hurry. These are short-term trades, and you stay small. You don't get big enough where you're going to actually be impacting price or having trouble getting the liquidity to get out of it. But I mean, yesterday, when AMC in the afternoon, when you started seeing AMC start to blast off, there was probably a decent opportunity for GME to follow suit. And you can see AMC blasting off through 38 and 40 around 130. And what's GME do? All of a sudden, they start doing the same thing, 190, 200, 210, 220. These two stocks do trade together. There's definitely a relationship there.
Yep. And if you don't know how to find stocks with short interest, you can just go to highshortinterest.com is one way. Anyway.
And those stocks were hot yesterday. The high short interest stocks, they have their moments, and they started to get hot yesterday. Does that continue indefinitely? No. But does it continue for a couple of days? It could be trendy. Lots of different opportunities, lots of ways to make money in this market. But, just flat out, just holding, an NFT rock at 1.3 million, hoping somebody pays $2 million for it sounds risky to me. So I'm out on that strategy.
Or it sounds like money laundering. Let's move on.
There could be some of that involved in there too.
Yeah. Okay. You want to talk fundamentals and earnings and all that fun stuff?
Yes. Dick's Sporting Goods. Let's go to a story.
I had Nordstrom. I had Nordstrom.
Dick's Sporting Goods story is nothing
unbelievable.
short of absolutely incredible. You go back to 2 years ago, and the stock has always been a pretty good stock. It's always been a pretty good company, even if you go back. But they have benefited from COVID. You know, the outdoor stores, and Jason Raznick with the call on our show probably 9 months ago now. On all of these outdoor plays. I mean, this has just been an unbelievable move for Dick's Sporting Goods, and justifiably so, because these fundamentals are nothing short of incredible.
This report was pretty mind-blowing here. So their earnings per share was over $5. Estimate was at $2.70. Sales beat 3.2 versus 2.8 billion. No surprise, their guidance came in well above estimates. And when I say well above, I mean like their EPS guidance for the year was like $3 above the estimate. While they're at it, they're like, hey, we got a lot of cash. We got to do something with that cash. Let's do a $400 million buyback and also announce a $5.50 special dividend. Those are the best kinds of dividends. They're special.
It's the mindset of people after COVID, and I have that mindset to a certain extent too. It's the YOLO, and you can't take the money with you either. And people are looking and saying, I want to enjoy life. I want to enjoy my home. I want to enjoy my area. If I'm not going on vacation, I'm going to go buy a boat. If I'm not going on vacation, I'm going to go buy, whatever outdoors, new trailers and tents. And you need all kinds of stuff from Dick's Sporting Goods to do fun outdoor activities. And a lot of people are doing fun outdoor activities. So it's a whole change. And you know what? People start doing fun outdoor activities and start saying, oh, I like doing fun outdoor activities.
Yep.
And it starts changing the mindset, not maybe permanently, but for longer term. And right now you're seeing that people like doing fun outdoor activities. And that's why Dick's Sporting Goods direct beneficiary from the pandemic, and this stock has went now from the COVID lows of $13.46 to now $128. And you could say it's overdone, you can say it's overbought, sure it is, but the fundamentals are backing up this price. In the case of some stocks that we just talked about, there is no fundamentals backing up the price. The fundamentals are fully here. I mean, what are they supposed to make this year? What are they projecting to make now, Spencer?
Earnings per share, mid to high $12 range.
$13. So it's trading with a P of 10. Is this as good as it gets for Dick's Sporting Goods? Maybe. But I mean, this is still just an incredible story. And am I chasing it? No, I don't chase stocks, but wow. Stocks making new all-time highs. I'm definitely not shorting it.
This stock,
and it's got a good name too.
What?
Had to throw it
Triple D Sporting Goods. Off the
My
March.
buddy used to say, "Is that your dad's store?" I was
Yeah,
like, no, it's not. But I wish it was.
Off the March low, it had 1, 2, 3, 4, 5 up months in a row going into September, and then it had 3 months of consolidation. It was just flat, and then it's had 1, 2, 3, 4, 5. So this is the 7th month in a row. So this thing, and if I could show you on the screen, here are the 3 down months. It went 57.88, 56.65, 56.81, 56.21. That has been the correction in Dick's Sporting Goods. Hard. I'm not calling a top in this one, folks. I am not going to do it. I refuse to do it. 128.70 is the pre-market high. If you have some options, if you got the 130 calls, you're still out of the money. If you got the 120 calls, I don't know what you paid for them. A couple days left in the week, but it just keeps on going. What it got? New York stock it's traded 300,000. I don't know if there's much in the book here. This is 128.70. Oh, 128.75 pre-market high. That's all I have for you, folks. No idea where to buy this thing at all.
JGIV is mentioning Academy Sports, ASO. That one's trading up this morning. Hibbett,
they'll be up in sympathy.
Yeah. All trading up this morning. Yep.
Yeah, your outdoor sporting goods stores. There's probably a half dozen of them out there. ASO is a good one too. Probably all going to trade up in sympathy, especially if they haven't reported yet.
Even Foot Locker, who reported last week, they're up this morning.
Well, people need to wear shoes. Mitch gave us a chart this morning. Look at this big 5 sporting goods. Look at that little chart there.
Same thing. These are, and it's going to be trading up in the sympathy too. I mean, now actually that one's pulled back quite a bit.
I know. I know,
Wow.
but it had a big run. It went from
It had a big run, but it's
zero-
pulled back
yeah.
into trend. I mean, you go in the
It
outdoor
did.
and you draw, you take your Jeff Mackey. Hey, Jeff, you take your Jeff Mackey purple crayon,
I don't know,
draw it
mine's
perfectly
purple.
on there. You came right back into the trend line, the longer term trend line. I'm looking at the bottom right corner. If you draw that perfect,
I'm
he's
trying.
even got the purple one. Jeff, we're giving you the big shout out here. Is it purple for Jeff?
He doesn't come on every
It's
time.
purple.
We got it. We bring Jeff on. Has
It's
Jeff?
purple.
Jeff's been,
You
Jeff's
try
been
and get him
before.
on. I've tried a couple times.
He
doesn't.
shouts out to us every once in a while because some of us
Yeah,
calls me and
he's
say,
probably
"Hey, they're
got
talking
that
about you on pre-market prep." He gives us some
CNBC exclusive. So
No, he's not.
No?
He's never
He got
on
the
CNBC
boot?
anymore. Yeah, I remember he got the boot off Fast Money because he had that one little segment. Jeff's hilarious. I love
let's
Jeff.
get him.
All right.
You reach out to him,
I'll reach out.
Spencer. You
We'll get
guys
Jeff
do it.
back on here. We use the Jeff Mackey purple crayon religiously
we
on
gotta
the show.
get
It's
the
one of
Jeff
the
Mackey.
best trading strategies there is out there. The Jeff Mackey purple crayon. You just take your purple crayon. It's got to be purple. You draw your perfect purple trend line there, and you buy it when it comes back to the trend line. You know what? BGFV just did. Now you're breaking out over 25. I actually like this idea. I don't, and on the backs of Dick's Sporting Goods, if Dick's holds up here today, I would not be surprised if this does break through 25 here today. So I like this chart. Wrote it down. BGFV.
When do they report?
Good question.
Good question, Joel. Let's look it up in the handy dandy Benzinga Pro BGFV reporting earnings on. They already reported August 3rd.
We like it when they have. Is there any sporting goods store chat help us out here that has
Hasn't
not reported yet? Because they will get more of a sympathy move than the ones that already reported.
Yeah, Hibbit. Friday.
Hibbit.
We got to get the Rev on too.
Hibbit.
Remember?
All right,
He's-
Joel.
Rev's been all over this.
Joel, you're reaching out to him.
Look at the. Remember the Rev gave us this one at like
did.
$9.
He gave us $9 or $10. This is well
He did.
before COVID.
Yeah.
Did he give us this $9? $10.
Oh, a long
This is
time ago.
This is a 10 bagger.
I hope he
The
still has
Reverend
it.
gave us the 10 bagger. He was loaded right up. The Reverend's got to be doing pretty good, man. In this bull run, because some of these stocks have really ran. Hibbit.
Okay, let's go.
Well, it's not a story of every retailer trading higher this morning because go look at Nordstrom. And Nordstrom, this was a great report. This is objectively a really, really good report. EPS was good. They blew it away on that. Sales was good. Their guidance was good. They raised their guidance for the year.
Victim of reporting last.
Jeez.
Victim of the bar being set so high by Macy's and Kohl's. So high that Macy's and Kohl's have been running and running and running. And Kohl's has been running and running and running. And JWM has been running and running and running. They ran up $6 ahead of their report because everybody was expecting them to absolutely crush earnings. You know what? They kind of did. But you know what? It still wasn't good enough. And it's come all the way back down. So absolutely a victim of reporting last after two awesome Macy's and Kohl's reports. You pair traders out there, these three stocks I've paired together since birth. Macy's, Kohl's, and JWN. They are very much related to each other. So as you see Kohl's and Macy's taking off like that, you automatically think that the bar is going to be raised. And JWN did run because of those two stocks. And now it comes back down. So now you'll see some separation for a little bit. Eventually they will get relinked up. Would I buy the pullback on Nordstrom? 32 is huge, maybe.
Oh, just gonna say
nice
that.
level. I might.
I don't think you see it. I think some people are like a big sigh of relief here.
But out of favor. There's no sigh of relief from the longs. I'll tell you that much.
No. But I mean, if you've been long this thing big time and you didn't have like scaled up offers, like going up, like what a whole number. Oh, it happened to stop at 40. Oh, what a coincidence that is. I mean, if you weren't scaling up into that, then I don't know what you're looking for in taking profits. Just kind of quiet. Pre-market low is 33.05. Mentioned that 32 level. Maybe, I don't know. I can't say we're not going to test that pre-market low, but I'm going to be 32.33 is buy zone for me in this one today and also moving forward. I'm gonna put this on the shopping list too.
Ooh, interesting. All right,
I got two for my shopping list for today.
We got two on Joel's shopping list. All right.
Yeah.
What else is on the list, Joel?
Yeah, give it to me.
No, that's it. You guys just gave me. I get all my ideas
so
from
recap. You have
pre-market.
two. What was the second one? A big five?
Yeah.
Problem is they already reported, so
Yeah.
that makes me a little less bullish, but I don't know. It'd be nice if they hadn't reported. I'd like that.
I agree.
The Hibbit and the Hibbit's run.
Do you want me to tell you the retailers who have not reported yet? Because
Is there any sporting goods stores that haven't reported?
Besides Hibbett, not really. We're still waiting on the Gap. So no, not
That's
sporting.
a sporting goods store?
No. I'm
No,
saying not
he's
sporting.
moving just to retailers.
I'm just going general retail here. No, there are no sporting goods.
Just Hibbett.
Just like Big Lots, and which is not really sporting goods. So
No, definitely not.
no, Burlington's Thursday. No,
How is old Burlington?
Burlington has
How
some.
is Burlington?
Burlington has some activewear.
Every time I look at that thing's at a new all-time high.
You know what? It's true. It's absolutely true.
Every
Burlington
time.
Coat Factory, which I'll always call it Burlington Coat Factory, even though they changed their name. This stock has just been a monster forever. I always say it's because they let the place. So if you go in those stores, it's somewhat destroyed.
It's a mess.
It's a mess. It's a mess. And I always liked before COVID, when I actually went to stores, I'd always like taking my kids to Burlington Coat Factory, and I could let them play in the whole toy section because at the time Spencer was like 4 and Natalie was 2, and they would absolutely just destroy the toy section. But at Burlington, I didn't even have to pick the stuff up because it was already destroyed. I could go into into a different toy store, and it's like, oh, they're taking stuff off the shelves. I got to put it back on, but 3/4 of the stuff was already off the shelves. So I just let the kids run wild in there. So it's fun. Like Burlington Coat Factory, and the prices are cheap. You walk out of there and they get a $5 toy, and they're all smiles.
Yeah.
Oh, you've upgraded from garage sales, buying your kids' toys?
Oh no, we still go to
Burlington.
garage sales. Actually,
You don't even have garage sales anymore.
Well,
really?
we didn't last year because of COVID, but they do this year. And we actually went to the first garage sale. I was actually just going to my parents' place, but on the way, there was like a bunch of toys thrown on the front yard, and Spencer's like, I want to go there. I want to go there. I was like, okay.
You got them conditioned.
All right,
baby.
so we pull over and we get stopped at the garage sale, and they both bought, I don't know, he bought a little motorcycle toy, and Natalie bought a little dollhouse, and they left all smiles. I mean, $5 goes a long ways at a year.
You did it right, man. My kids, my little girls, when they want it, they want sushi and yeah.
When they were little kids?
Yeah, Lisa turned them on to that. I'm like, are you kidding me? I mean, they know
gotta
me.
set the bar lower.
Lower
bar.
Sushi, it's good for you.
Keep the bar low, Joel.
Yeah,
Sushi.
Yeah. Now with Data, like she's coming over, I'm
sushi.
like, I'm hitting up your credit card on this one, man. I'm not doing that stuff anymore.
Well, there is one more retailer.
Trent, we did wear masks at the garage sale, so he was saying Delta the risk. Yeah, we masked up at the garage sale. The kids too.
There was one more, I guess 2 more retailers that had earnings overnight: Urban Outfitters and Express. I don't know, and Express is also sort of
stock.
Yeah, it's like part meme stock as well. It's not always a meme stock. It some days.
What is the symbol? EXPR?
Yeah, sometimes it is. Yeah, you're correct. Sometimes it is. Sometimes it isn't a meme stock. But anyway, the Express numbers were also good. Right, their EPS, they're back to profitability. Their sales came in above estimates. And they say their guidance, their net sales for the second half of this year are comparable to 2 years ago.
Show me 850 in this one. Pre-market high 820, spike up. This was back at the end of June. Yeah, a little spike 867. That's my target for that today.
Okay. There's a few other retailers that got dropped in the chat. Restoration Hardware is getting some love from Stonebridge. No, I'm just saying in our chat this morning.
Oh.
So I figured,
when did they report? Did they report already?
Yeah, they reported.
Look at the chart.
They reported on. Oh no, they didn't actually.
They're coming.
Yeah, they report on. Go to my pro, RH. Their last report was on June 9th, so they're
the stuff in this story, Joel. We often say it looks like it came from a garage sale, but they sell they've got to figure it out because they sell this antique-looking couch for $10,000, and it looks like it's 25 years old, but people like that stuff. I never have figured out the RH story. It's always mystified
Subscription.
me. Is that what it is?
Yeah. Yep.
Anyway, it's always mystified me, but the stock just continues to perform. It's been in consolidation station here for the better part of the last 6 months. Probably going to break out again. Probably going to see 1,000. Why not? It's come this far. I have never understood the appeal. I go into that store and I was like, I would buy nothing in here ever because 1, everything is too expensive, and 2, it all looks old. But some people like that.
Yeah, they report. I don't have a confirmed date, but it's probably not till September. So they're way late. Anyway, let's move away from the retail. Even though that was
people asking BB, Rocket and Seeker both asking it. This is a meme stock as well. It does trade like a meme stock, and when AMC and GME start going, BB goes too. So not surprising. BB has a great day. Why? Because AMC and GME had a great day. No other reason. It moves with AMC and GME. These Reddit stocks, which shouldn't say always meme stocks. Some of these are Reddit stocks.
They're not even all Reddit.
Reddit meme. I'm putting it on. People will be mad at me for that, but I'm putting it together. There's a group of them. There's probably a list of about 25 of these stocks that all move together pretty closely. The big ones, obviously, and Bed Bath & Beyond is on that list too sometimes. But AMC, GME, BB have always somewhat tended to move together in the last few months.
The key word is sometimes, right?
Look at 30 and triple BY. They jam it through 30. Get out of the way.
Big level.
Get out of the way.
Is
Get
there
out of the way.
Here? If you're trading BB, if you're trading BBBY, if you're trading Wish, if you're trading this BBIG stock, you got to keep an eye on what AMC and GME are doing. Have those as your leaders. If AMC and GME continue to build on yesterday's gains, those stocks will go higher, in all likelihood. If GME and AMC start to roll over, then these other meme stocks, these other Reddit stocks will start to roll over too. So they are absolutely your leaders. So if you're trading BB, you're watching the action in AMC and GME very closely.
And someone dropped in Rocket. The key word here is sometimes, because Rocket was for the briefest of moments of meme stock, but it is not anymore for whatever reason. So
it's still in there. I had a good day yesterday too. That was not coincidental. It went up 18. It went up 3-4% yesterday at the top.
It went up in the morning, and the other stuff didn't go until the afternoon. So
yeah,
I don't know.
Maybe there's a lag trade here. Maybe Rocket could go here today. Keep an eye, AMC. Keep an eye on AMC and GME. They move. Rocket moves in that category too.
Yeah, okay.
But Rocket has fundamentals behind it. Like the Rocket is actually cheap, and I'm still saying that they should put a dividend on that stock. And I think you'd see the price reprice. Fundamental traders be like, oh, I have a dividend now. I'm getting paid. So I'll keep saying it. Rocket should put in a regular dividend instead of having it zero. UWMC is one. Rocket, give us a dividend. I don't have shares.
Someone is asking about what happened to Sava. There was some I think a short report out yesterday, and
really?
And the company,
after hours.
Yeah, I don't know if it was actually a full-on short report, but it was some negative commentary, and actually Sava responded. If the company responds like that,
didn't respond well, it doesn't look like.
Right, but if the company comes out and responds, that tends to, I feel like that sometimes gives the negative comments a little bit more credence, as opposed to if they ignore it. Maybe. I don't know.
This stock,
Crazy.
Joel, is like one of the most dangerous stocks, man. Look at the move it had. We talked about it back on July 29th. We talked the movers and went from 140 to 100, and then the next day was $65. It got cut in half in 2 days. Then it built on this rally for literally the last 3-4 weeks, bringing us all the way back to 117. They pull the rug out from under it again. Fool me once, shame on you. Fool me twice, shame on me. I want no part of this stock because for the simple reason, could it bounce? Yeah, maybe it can bounce. 80's huge. It's oversold maybe overnight here, but I'm not going to put this and they're pulling the rug out for under to 31% when just did it 3.5 weeks ago. Same thing to you. So it's a tough stock to be invested in when they're just going to want to fall 30% on somebody's comments.
Who was it? Who did
I
the short?
actually don't know. I
gotta go hunting. I haven't even looked up the story on this. I hit my filter all night, but I was like, that's too wild. I'm not trading. I never looked any further.
It's like the number 3 trending stock this morning behind seeing GameStop. Well, it's also
allegations regarding scientific integrity. Ooh, love that.
That's not good.
There's claims posted online.
Yeah, but I don't actually know where the claims are, like who the claims are from.
Yeah, I'm trying to find it.
Whatever, neither here nor there. Anyway, 8:30. So that's what's the deal with Sava this morning. That's why it's down 30%, give or take. Your number one loser this morning is SAVA.
Nice.
I'm tempted to. I don't know. I'll just say there's a 3 low zone here. Between 70, you've got to give a big zone in this one, right? There's a 3 low zone between 75 and 82.09. So 78.5. If I was short, I'd put a bid out at 78.5. Full disclosure, no position.
Too wild for me, man.
want to take a quick second here to wish James Santangelo a very happy birthday. If my soundboard was plugged in, I would play.
We don't have the happy birthday song.
Well, we do have it. It's just not plugged in.
Joel, sing it for him.
Yeah.
Joel, sing him happy birthday.
Does James live in Michigan? Is he a Michigan man?
I don't know, James. Are you a Michigan man? Let's find out. Anyway, okay. It is 8:30. It's 8:35, just about. Let's bring on our first guest of the day. He's here in the studio. He's backstage. Craig Johnson, Managing Director, Technical Market Strategist at Piper Sandler, and I think they just put out their latest commentary overnight. If I'm correct, Craig. Good morning.
Good morning. Thanks for having me back on the show. How are you doing this morning?
We are doing pretty good, all things considered. Stocks at all-time high. Well, not all stocks, but markets at all-time highs. S&P's at all-time highs. Nasdaq's at 15,000. Yay! Let's start there. Let's start with the broad market. What do you think of that fact and the fact that a lot of these stocks are frankly not at all-time highs?
And just thrown in, the breadth there. Are you worried about it being 6 stocks, Craig?
Sure. I mean, it's been a pretty sweet summer. And by the way, that's what we titled our Informed Investor publication this month, So Long, Sweet Summer, as we did see the broader market up kind of mid to high single digits over the last 3 months. But over this entire period of time, while the S&P has made its 50th new high yesterday, okay, we're on pace for 3.3 every 3.3 trading days this year. We have made a new high in the S&P 500.
Easy.
Wow.
So the last time we saw anything like that was back in 1995 when we made 70 and change new highs that year. We're at the exact same pace at this point in time. Now, does this sort of advance bother me? It does bother me a little bit because it's been so good. It's been such a great summer. And now we're heading into some of the more seasonally challenging months of the year between September and October. And to the point, Joel, that you were making about market breadth, I mean, anybody that's been looking at the internals of this market knows that the internals of this market peaked in February. We also saw the CQQQ peak in the February timeframe. The XBI peaked in the February timeframe. And the Russell 2000 has been stuck in a pretty narrow trading range for multiple months now. And if any sort of break below 2130, I think is going to be a market that probably has a little bit of a sell-off start to play out. But I got to tell you, it's innocent until proven guilty, until you break that 2130 level on the Russell or you break the uptrend support line for the S&P 500.
Why do you pick on China and biotech specifically there?
Well, take a look. Can we pull up the charts on these?
We can. Sure. Joel, let's start with China. We'll start with China here. The K-Wave or the CQQQ.
Stop sharing, Spencer.
Take a look at the CQQQ, and let's look at this on kind of a longer. Take a weekly or a daily time frame, if you would, and you can see that that has been very much in a downtrend for a very extended period of time. And people are trying to trade this in here, but you can see that back in February is exactly where we saw this index peak, just like the internals of the market and just like you saw on the XBI.
So, like you said, most areas in the it's not just this, it's not just XBI. Most areas of the market seem to, with the exception of the big 4 or the big 5 FANG stocks, right, peaked back in January or February. But you're not changing. You're still bullish here because, like you said, until we break down, there's nowhere to go but up.
Correct. And if you look at a chart of the Russell, if you pull that up, Joel, or the S&P 500, either or, I just look at this and say, hey, we've got to look at this until you finally break below that 2130 level on the S&P or on the Russell 2000. And I know you pulled up the IWM, the ETF on it, but until you break that level, you got to think about this as innocent until proven guilty. And I will tell you that the internals are deteriorating, and you just have to keep in mind that tops are not single point events. Never have been, never will be. Tops are always going to be processes that take time to play out, and we've got to work our way through all that kind of emotion, sentiment, and right now, people want to buy stocks, and you have a lot of individual investors out there still wanting to buy stocks. And I tell you, when I look at our data, and again, we're looking at everything in the marketplace. I mean, my new high to new low ratio over the last 26 weeks has been getting increasingly skewed toward stocks and groups that are making 26-week new lows than stocks that are making 26-week new highs. I mean, we got to pay attention to these kind of things.
How do you break this mentality, though, of buy the dip? Because this market has been rewarded again and again and again. You get a 10% sell-off in something, and then, they come in, they buy the dip, and it comes back. I mean, this is market, obviously S&P is the same thing. Pulls back 1%, 2%, 3%, and they can't wait to get back in. Money managers seem to can't wait to get back in. How do you break that mentality to ever get a 10 or 20% correction when you have so many money managers jumping in when we pull back 3%?
And might I add, you have $4.1 trillion of cash sitting on the sidelines, and it has only been going up over the last 5 to 6 weeks. And how do we change that mindset? I think you're not going to change that mindset until you finally break below that 2130 and really scare people. And 5 times we've come down to that 2130 on the Russell. But it's going to be a price break is what it's going to have to ultimately be. But keep in mind, this is playing the game. It's almost playing a little bit of Russian roulette, because every single time that we've come down to that 2130 level, and again, people bought it, it bounced, it worked, the internals have gotten worse every single time. So whether this is the period where we finally break that, to be determined. But again, the other thing for all traders to keep watching is on that Russell 2000 chart, if we don't get back above the 50-day moving average in the next several sessions and we stall at that 50-day, I think that's going to be a little bit of a warning sign for traders to be taking some money off the table.
I'm a little confused here. I'm trying to understand. Are you bullish or are you bearish? Because you keep talking about the internals getting worse and worse, but at the same time, and we're coming into what is historically a down part of the year. Trying to understand here where you're coming.
So my year-end price objective for the S&P 500 is 46.25.
Oh,
I've got 3% upside. Okay. Does that make me tremendously bullish when I've got 3% upside? I'm kind of looking at it and saying, I think we got a reasonable target, but is this a market that's a table-pounding buy in here? Probably not. Again, I think you got 3% upside, and when you come and you look at the internals of the market, they've been getting worse. So we've got to pay attention. I think we've got a good target. It probably gets hit, but again, it's not a lot of upside from here for right now. Do I define myself as bullish or bearish? I kind of define myself as more kind of agnostic to this market, following the trends. They're moving up for the S&P 500, but the Russell's a trade, not at this point in time, and that's it.
We're on the line with Craig Johnson, Managing Director, Technical Market Strategist at Piper Sandler. If you were listening to this show back in March and April, Mr. Johnson accurately portrayed where the market was going to be going, really, with really good predictions. I just want to ask you, help me out here. We had the reopening stocks and we had the stay-at-home stocks. There seems to be a lot of separation here. And, these reopening stocks, I mean, they've had substantial sell-offs here. Carnival Cruise Lines, Royal Caribbean, the airlines can't get out of the way. What's your take? Have we had some kind of separation here? And what's your take on the reopening stocks?
Yeah, I think this market is getting further and further concentrated into the big 4 or 5 stocks out there at this point in time. And these reopening stocks, whether it's Las Vegas Sands, whether it's going to be, the Hilton hotels, whether it's going to be the airlines, at this point in time, yeah, they're all rolling over, which suggests that this reopening trade is definitely losing some momentum and losing some speed at this point in time. So those aren't areas where I've been tremendously excited. In fact, if you go through and you look at what is working in the market, and you see things like Johnson & Johnson and Pfizer and some of these other areas of the market doing well, I don't really define that as offense. That feels like it's more defense.
Yeah.
And the way the electric utilities have worked, I would define that as more defense than it is offense.
Yeah.
And then, there's a couple other charts that I'm watching. Is there any way that I can throw up a screen for you guys?
Yeah, hit that.
You got a share screen button at the bottom.
Okay.
You see where it says share screen? Or
All right.
just says share. And then you'll get a couple different. You'll get choices. What do you got? Like 9, 10 screens there, Craig?
We have a few. We have a few. So let me see if I can throw this one up here.
All right, let's see what
One
we got.
second. So I want to. Can you see this on your guys' end?
Yep.
Takes us. Oh, nice.
All right. So this is the book we just published last night. So you guys get a sneak peek preview.
Nice.
But there's a couple charts that I want to show you that I think are really important for all your listeners out there. Okay. Take a look at this chart. Growth versus value. Huge discussion across the street on this. So when I look at a ratio chart of growth versus value, I've observed that when rates have been moving higher, the risk for the ratio chart rolling over, and you can see that the market's been shifting back toward this. So it's been this negative correlation between rates and growth versus value. So if this is going to sort of play out like we've seen before, all your listeners need to pay attention to when rates are going to move up, you're probably going to shift back toward the value trade. And I think at this point in time, if we're going to get tapering from the Fed, the odds are that rates could definitely move higher. Okay? And it's an inverted correlation between treasuries and this growth versus value trade.
So just to repeat that, as rates go higher, the value trade comes back in favor.
Correct. So that's the thing that people need to watch, because I got to tell you, that would be extremely painful for the street and for all traders out there at this point in time, because we were very much in a growth mindset coming into the year. It flipped the value. It was painful. It then flipped back to growth.
Yeah.
What if it flips back to the value side as rates start to go up? And you can see from the correlation work we've done that it is inversely correlated.
I mean, it fundamentally makes sense too, because if you've got rates going higher, longer term rates going higher, that means these growth stocks that are making earnings in the future, those future earnings aren't worth as much as the value companies who are making money right now.
Correct. So this is something to watch. And what I'll be looking for on the chart is any break below the 40-week moving average that we've got plotted in here to really come back and say the value trade is coming back on. And by the way, the last time we did this kind of growth, value, growth, and then failed was back in 2002, 2003 period of time. And I think we all know what that period looked like. So again, not putting myself into the bullish or bearish camp. I'm a little bit more agnostic because I got 3% upside, right, to my target.
Go ahead.
If you're going to think the value trade's coming in, I mean, you can look at the autos, you know, General Motors and Ford, where they're trading with P's of 5 and I think 8 respectively. You know, Toyota's come down recently. Honda Motors. I mean, we have hammered some of the value stocks here, and that's probably been hit with a little bit of the reopening trade too. Would you be looking at these sectors as opportunities? Because if you think the rate's going to go up and if you think the value trade is going to come back into favor, there's a lot of value in some of these traditional automotive makers.
There is, and I will just say that I actually called some of those out in this month's publication here. I mean, look at the consolidation we've been in there. These traditional automakers are starting to break out to new highs. I'll zoom into it so you guys can see it. And look at the relative strength inflection point. Again, these are our own proprietary charts going all the way back to the 1960s, so you're not going to find this anywhere else. So I'm glad I can share it with the listeners here this morning. But also look at a chart like Tesla. I mean, look at this consolidation, this reversal starting to happen. The relative strength hasn't been great as of late, but I think this kind of pullback is a buying opportunity.
Oh, Ken. Now we're getting somewhere, Craig.
Growth autos in there too.
Yeah.
Now, also take a look at, you know, some of these other pieces too. Like look at steel. Okay, we got a huge infrastructure bill that I hear might get passed.
Oh, yeah. I thought it was passed. I'm so confused.
From the House, but now they got to get it through the Senate, and they got to get through guys like Joe Manchin and stuff like that. So we'll see how that plays out. But you go through and you start looking at these steel groups, domestic, we're breaking out of a consolidation range that we have been sitting in since 2009. And look at the relative strength and look at the momentum. It's quite strong. I mean, why would we not look at things like Steel Dynamics in here? I mean, it looks pretty darn good. Should be bought. Okay.
Craig, where does gold and Bitcoin fit into in this scenario?
You know, gold has not been working very well. And give me a second. I'll bring that chart up. Let's see. That's going to be about page. Well, here's gold right here, right? Like we're just sitting here making these lower highs in here. and I've got a MACD signal that's been flip-flopping back around, but it's just not doing a single thing. So I look at gold not working. If I go through and I look at the cryptos right here, here's Bitcoin. And I look at Bitcoin, and I think that the lows have already possibly been made. And I think you're going to be starting for a next leg up. And let me just show you this chart, too. If I can find it. I got it somewhere here on my desktop.
Are those all your screens?
Yeah, it might be.
Wait, hold on. Before you go off, this is a 310. Whoa. That's a 310-page report, right?
310-page report is correct. Yeah.
How long does that take to make?
Did you do that all yourself, Craig?
No, we've got a great team here in the States, and we also have a couple great people that work for us in Chennai, India. They do an awesome job, and our team works literally 7 days a week.
All right, so wait, what is this chart now?
This is a chart of Bitcoin. This is a daily chart, and I just point out to people when you look at Bitcoin, because everybody's wondering, what do you do with this stuff, right? I look at this and say, we pulled back to that 78% sort of retracement level. We found support multiple times. I look at this and say, when we finally started moving above that 47,000 level on BTC, we're starting our next leg up. And I think you're going to go back and retest those old highs. And again, look, I'm an active investor in not only Litecoin, but ALGO and some of these others out here. And they've all done very similar things, retrace back to that 78% level. And I think your listeners all know I actually mine Bitcoin in the basement of my house.
Yeah, we remember. We remember.
So I think this is going to continue to keep working. And as you continue to have more crackdowns in China on the miners, this mining stuff is going to move to the States. And I think you're going to see more of your listeners, tuning into this stuff and participating in some of the mining. It's just the equipment's expensive to buy, and you got to let your wife know you're going to spend a lot on electricity.
I can't let you go, Craig, without asking, have you bought any Ethereum rocks yet?
I have not bought any of those. I've been primarily focused on Litecoin, ALGO, and any of the tokens that'll pay interest on Coinbase. And we did highlight Coinbase in this month's publication too. And again, from an investor who didn't buy Microsoft, who didn't buy Tesla at the offering, who didn't buy Amazon, I'm buying Coinbase for that simple reason. It seems like there's something really changing here with the environment, and the chart also now looks like it's bottoming out.
What about the competition? And I've always been skeptical here because I think a lot of competition will be coming for Coinbase. Even Robinhood is competition for them as well. Are you concerned about competition eating into their margins?
I am not concerned about Robinhood whatsoever. Robinhood is, in fact, primarily the people have only been trading one particular coin over there, which is Dogecoin, and
Dogecoin.
And I just don't think that is the end all be all. And I would also just say that let's see where I put this Coinbase chart. I'm sure I can find it quick, but yeah. But my point is, I don't think it's going to be a problem. Some of the things that we've been showing in terms of Coinbase, like you got a cold wallet over there. You've got the custodial business that's taking place. I don't see a lot of other places offering cold wallets where you can really keep the stuff offline. CNBC had a discussion yesterday about Coinbase hacking and all that other stuff.
Yeah, I saw that.
I've been hacked twice.
What?
I've been hacked twice. Okay. One was when the exchange down in New Zealand went under, when they had intermixed wallets.
Yeah.
Okay, so lesson learned on that one. And then the other one was over at the exchange up in Seattle. They were like, "Oh, you've been hacked. So sad. $20,000 out the door," and they could care less that it happened.
So you didn't get the money back when you were.
Oh, you'll never get the money back.
Doesn't this worry you though? Like, this is why I'm so scared to, be fully invested. Like, and obviously you can play Bitcoin in different ways, but I get scared to come in and just, and maybe it's not Bitcoin or any of these others, because somebody hacks in your account, runs away with your money, and it's just gone.
Well, right. When I called Bittrex, and that's who I got hacked with for $20,000, they're just kind of like, so sad, it was your fault. And, you have no idea at that point in time whether it was an inside situation, truly an outside situation. You have no idea.
Right.
But at Coinbase, you can at least put this stuff into a cold wallet. It takes 48 hours to get anything out of there with 2 email verifications. I'm not going to get hacked again. So if you want the safest place to put your money, it's going to be Coinbase. And again, that's where I put my mining into and everything else. And any listener out there that's not using 2-factor authentication with your crypto accounts, just take your money out of the market, period. Okay? Just stop.
That's great advice for life. That's great advice for life.
Just stop. You're insane, and you should be using 2-factor authentication.
So this person who got hacked on CNBC that they were featuring yesterday morning, this person didn't have it protected correctly.
Two-step verification.
Is that the 2-step authentication? Was that
Correct.
the problem?
That's a problem, and that's, Coinbase tells everybody 2-factor authentication. You should be doing these things. You should be changing your passwords. You should be doing all these different things. Again, they're not doing it. They're not using cold wallets. They're not doing those things. Leave what you want to have out in Coinbase Pro to trade, but then put the rest of your money into the cold wallet if you're just going to hold it and stake it and sit on some of those coins. I mean, I don't get it. I mean, we need to kind of have a little bit of ownership of this ourselves.
Craig, what do you got on the wall behind you? And do you keep that up there, or do you have to kill us if those charts all the way, not the window?
That's the
right
secret.
behind you.
On the whiteboard.
On the whiteboard, I kind of put phrases up there that I like to keep thinking about, like HLTR, high-level trading ranges. I put other things up there where I think about, okay, if you're going to be wrong on a stock, don't be wrong for long. I like to think.
I like that one. I like that.
And then that picture you see above the very top picture up there, that is a chart of the crash of the market back in the 1920s. Little secret: if you flip that chart over, it is actually signed by every legendary technician in the world.
Ooh.
But don't tell anybody that.
I didn't sign that.
Yeah.
Joel, you didn't get Joel's
Not yet.
Craig, say hi to Opie for me, okay?
I will say hi to Opie for you. I'll chat with him here this morning.
All right, Craig Johnson, Managing Director, Piper Sandler. Craig, always a pleasure. Thanks a lot, man.
Thanks. Have a wonderful day.
Great stuff. Someone was asking where to get those charts that Craig just put up. That is a Piper Sandler report. It didn't even go out yet, first of all. It's what Craig
off the press on PreMarket Prep right here.
And that is a report that they will send to their clients. And you just saw some of it here.
Put some money with Piper Sandler. That's what
There you go. There you go.
Smart, man. He's into everything.
Wow.
Craig
2-factor authentication.
Craig makes some fantastic calls.
Wait, forget all the stock market stuff. The biggest takeaway from that: 2-factor authentication on your on your email, on your brokerage, on your Apple, everything.
On your bathroom door.
We are going to 2-step authenticate. Whatever the word is.
Whatever the word is.
To get into the pre-market prep
yes.
show. That's what we got to do.
2-factor authentication for everything. on your computer. Yeah, anyway. Okay. 8:57 here. I see Peter Tchir here. He'll be on with us in a couple of minutes. Guys, anything we need to talk about yet? Final thoughts?
Ticker. 2 minutes of ticker time here.
Yeah,
give me a ticker or 2 or 3, and we'll try to fly through them here in the next 2 minutes. Tickers.
Okay, let me try ones that we haven't talked about a lot in recent days. Let's go through here. I don't know if James is referring to like Triple D as in like the stock. I think he is. Well, how was Triple D?
Talk that one. It started. Well, you know what, and this is obviously a growth story. Not so much a Reddit stock, but we have seen it on Reddit before. You're getting a little life here. Last 3 days, showing some life. Problem is, you're kind of no trend, though. I mean, you're just in the middle of nowhere. So you got up to 31, 32. You got bag holders from the big gap update. What was the big gap update from 28 to 40? I don't remember that. Was that earnings?
Yes, it was.
Yeah.
It was.
Yeah. So you got people
earnings.
bag holding from the earnings report here. So it makes it a little tougher. I think you have another buck or two upside potentially, but it's not easy sledding. That's not an easy sledding chart.
Yeah, if they didn't go and get it going yesterday, I don't know what the chances that. Yeah, a little bit. 30-42 was a high yesterday, and I see this other high at 30.78. So somehow, if they can manage to bust it above that 30.78, things open up to the upside a little bit. First things first.
Tiger Woods is in chat asking about Corsair. Tiger, we talked about that yesterday, so go to yesterday's show for that. Let's look at Eli. Speaking of Tiger Woods, Callaway Golf, ELY.
This is another outdoors play.
Yeah.
Have they reported?
Yes, they have. They reported like a month ago. No, like 3 weeks ago.
You had the capitulation sell off there 4 days ago when it got down to 26.72. Now you bounce back. I got to think 30 is a logical stopping point for this because that's where you had some support there. I'm ballparking it, but I'd say $30, just rounding it, to that number. That's a logical stopping point. You're in a downtrend now is the problem. It's not clear sailing. Golf seasonality comes into play. We're coming out of golf season. Obviously in Florida, it's always golf season, but up in my neck of the woods, golf is getting towards the end of the season. So, you got a month or two left and then it moves on. Golf stocks do better in the spring. So from a seasonality perspective, so I'm kind of not interested in this one right now.
Turning up, let's see, up, down day, up day, down day, up day. I don't know. Maybe we'll get another update here. Always important to hold the close right here. Pretty 29.24 was the high from yesterday. Where'd you close? 29.09. This would be one if you hold 29 off the open, you poke your head through 29.46, maybe get a look at 30. Under 29, I mean, you've had, since that low, you've had 3 higher lows. So that's a good sign for Callaway Golf. So, all right, I'm going to let you guys take it from here. I'm going to try and get all these symbols over on premarketprep.com. And Spencer, we'll see you at 3:30.
All right. I'm going to bring on Peter Tchir now, head of macro strategy at Academy Securities. Peter, good morning. Thanks for joining us today. Oh, wait, you're on mute. Let's unmute you here on the bottom of the screen. There we go. Oh, no. Still can't hear you. Let's try this. Let me edit your mic settings. Nope, you're all good. Try switching your mic input. That may be it. I have some questions prepared if I can ever get Peter's audio. Guys, Peter, by the way, great follow on Twitter at TF Markets. Actually, no, it's TFMKTS. I'll put his handle up on the screen here to follow Peter. He's a great follow at TFMKTS. That's his Twitter handle, Peter Tchir. And if we can ever get his audio going, we will be able to. Hey, I hear
there
something.
we go.
Good morning, Peter. How are we doing?
Pretty good. Sorry about that. Somehow the AirPods weren't working today.
That's all right. Bluetooth, am I right? I want to ask you this quick. Aside from the Fed and interest rates, you're a macro strategist. What macro storylines is the market focused on right now?
I think increasingly we're focused on what's going to happen in DC and the infrastructure. Even if you go back to February of this year, there's a lot of questions. Why are rates so low? One thing that's actually been tracking, I think, is disappointment with fiscal stimulus. And I expect there to be more bad news on fiscal stimulus come September, now that we've gone through this Afghanistan debacle. I expect there to be more.
Speaking of Afghanistan, I mean, is that a thing that the market is really watching right now, do you think?
So I think Afghanistan itself is a bit of an issue, but behind the scenes, I think what I'm hearing is from people down in DC, any hopes of kind of bipartisan work is kind of dissipating quickly. So I think Afghanistan is affecting the mood in DC. It's affecting how the media is dealing with the Biden administration. So I don't think the market's yet thinking about that, but I expect in the coming week or two, that's the news stream that we're going to be focused on, and that we should be pricing in now. So you want to get ahead of that, I believe.
How much of these headlines, though, are just noise for the markets?
I think the Afghanistan itself is largely noise. It's going to be, does it affect what happens for fiscal stimulus? Does it push it further down the road? Does it make it smaller? That will be real for the markets. That's not yet being priced in, and I expect that is something that will get priced in the coming weeks. So I want to be a bit cautious here because of that.
More fiscal stimulus? I mean, we didn't get enough.
The market at one point was expecting $1 trillion bipartisan deal. That seems to have been dwindling and getting smaller. We're expecting 3.5 trillion push through reconciliation. It's not even clear the Democratic Party has that together anymore. So I think we've priced in a lot of expected future fiscal stimulus and infrastructure spending that we may be shocked when we don't get anywhere near that amount.
But we'll get something, right? And
we'll get something. But then again, I think a lot of that's priced in already.
Okay. So moving to the Fed, and they seem to hint for a day or two that they were thinking about tapering, and then no, never mind, we're not really thinking about it yet. We'll let you know when we do. Is this going to be a case of like you think the Fed will just give us like a nice heads up on when that conversation is going to happen?
Yeah, and I think a lot of the tapering is already priced in. They've been signaling it for so long. I think people are kind of fed up talking about it. My expectation is they would have announced something a little bit more at Jackson Hole. The fact that it's a virtual event, I think they signal, and then at the September meeting, we actually get the tapering. I think it's going to be so slow that they taper and so drawn out, it's really not going to impact markets materially.
All right, so what macro headlines are you watching then? If you think infrastructure is priced in, you think tapering is priced in, what is there anything not priced in?
You know, I think we're all stuck here watching COVID and what happens with the work from home versus reopening trade. And that seems to be getting a little bit more push for the work from home type stocks, right? It feels like every company is now starting to delay plans for fully reopening their office. So that should be good for those types of stocks. A little bit disappointing for the commodities and cyclicals that really were expected to benefit with full reopening and with that fiscal stimulus. So again, I kind of want to underweight those a little bit right now.
Okay. Yeah. It's funny because we haven't been talking too much about COVID and the Delta variant as it relates to markets because the markets just keep on going higher. Frankly, the overall markets do. Something we've been asking every guest is, what do you make of that dichotomy, the all-time highs in the NASDAQ and the S&P, and so many stocks just so beaten down?
It is strange, right? There's sectors. A lot of the clients we talk to do merger arb. Merger arb had one of their worst months ever.
Really?
Partly because of Aon, partly some of these Chinese deals. So it's below the surface. I think there's much more volatility, much more opportunity. You want to capture those rotations. I'm eyeing the Chinese digital stocks. They're down 50% from their highs. I'm not, they traded well the last couple of days. I can't tell whether that's the real bounce or we have one more leg down as China continues to decouple. But I really do think you've got to look for these different sectors and you got to be quick to rotate in and out because there is a really good traders market below the relative boring index numbers.
What would be? I guess you'd just be watching price action on China to know whether, because I've been thinking like, of course, K-Web and all those and Baba and Baidu, of course they're going to rip higher 20%, and then that's just a classic like fake out to me. But I don't actually know. Well, I guess we'll wait and see.
I'm leaning towards that with you. I think I'm watching very closely the shares outstanding, and so far that kind of continued to attract inflows during this whole sell-off. It'll be interesting to see. What I'm looking for is I think we got this little pop. If it starts selling off, do we get the outflows? Then I think there's a lot more downside. If you keep getting some inflows, it's probably tradable for the next week or two.
You're talking about K-Web, but that's interesting because it almost mirrors, and I'll bring up the chart here, it almost mirrors what happened to jets last year, right? When the airlines, obviously, it was like ground zero for COVID, right? And the Jets ETF was like taking in massive amounts of inflows every single day because people, I guess, just wanted to buy the dip. Yeah. And K-Web is like the same concept, right? People they see this and they think, oh, it can't keep going down forever, and they come in and buy the dip. Interesting that the trend is playing out again. What does that tell you about like the mood of the psychology out there?
Well, I do think there's a lot of investors, particularly small investors, who are looking for anything that they can play where you can double your money, or you play it through options and you're trying to quadruple your money. So they gravitate to these high volatility kind of sectors. They look at this, and I think the natural reaction is, well, if we can just get back to 100, I've doubled my money, and I put some leverage on it, I've done extremely well. So I do think it tends to gravitate towards a certain type of trader, and that's why and in this case, I think the fundamentals are that China is delinking from us. So I think there probably are more bad headlines. So I don't think we've bottomed. We might have a tradable, rally from here. I expect one more pretty good solid down leg. But that's the thing that caught my eye, right, is people really do gravitate to these high volatility things. They throw the money at it because it's interesting. It's, something to talk about. Hey, this could go up 50%, whereas it's probably hard to bet on Apple doubling at this stage.
All right. Is there any area of the market that you like right now? Any sub-area, subsector, industry?
I think logistics still, anything that can benefit from an increased manufacturing base in the U.S., so I think all the logistic companies are interesting. Anything, some of these, temp hiring companies. I do believe we're going to see manufacturing growth in the U.S. I like a lot of the financials, especially the non-traditional financials, as they will cater to people as we get this growing economy. So that's areas I'm looking at right now.
You say non-traditional financial. What do you mean, like Square, SoFi?
Yeah, and even some of the non-digital ones. There's lenders out there. I can't really talk about specific companies, but I think some of the non-traditional lenders could do very well in this environment. So, but yes, anything that is going to benefit, especially from getting banking to more people.
All right, Peter Tchir is the head of macro strategy at Academy Securities at Twitter, on Twitter at TFMKTS. I'll put it up on the screen. There it is. Peter, thanks a lot. Appreciate coming on.
Thanks a lot for having me.
All right. 9:10, guys. I have been lacking on the call to action front today, so smash that like button for me. We're only at 319 likes. We got to like 700 yesterday. Can we get to like 600 today? Either way, I think they call that a downtrend, right? When you go from 7 to 6. So let's see if we can get some more likes. I would appreciate that. Here's the plan for the rest of the day. The stream's going to end in a couple of minutes. Live trading is back. We're on Wednesdays, Thursdays, Fridays. Mitch, Ryan Faluna, I'll be there as well. I hope Zunade will be there. The 4 of us will go, 3-4 of us will go for an hour, and then at 10:30, I will bring on David Green. We'll get David Green for a half hour, 10:30 to 11. Then the usual programming: SPAX Attack, Power Hour, Get Technical, Moon or Bust. We're doing our first. Today actually might be our very last episode of First Trade, potentially. And then I'll be back with you for the At the Close show. With Joel at 3:30. So stick around for all of that. And there's more stuff on our list I think we didn't get to today. Reminder, the Robinhood lockup expiration, I have it written down here, was August 30th. Now, I know that some people who got some shares of the IPO at the IPO price have been able to sell. The Robinhood will just restrict your IPO access going forward, but you can sell. It's not that stiff of a lockup, but just we'll keep an eye on that in the next coming days, just to see flows into Robinhood, price action there, volume, all that good stuff. Speaking of, let's pull up a chart of Hood for a second, and just because I haven't looked at it in a couple of days. Okay, yeah. All right, bounced off that low from, what was that, Friday? Yeah. Okay. As a reminder, all the information from our show is meant to be used as informational purposes and not for investing or trading advice. You know what? Before I go, let's just do a real fast crypto update. Just to do one now, and then we'll do one. We'll do some more throughout the day. We're talking serious stuff here. We're not talking EtherRocks. We're talking like actual cryptos. You see there, mostly red today. Bitcoin, Ethereum, Cardano, all down. Pretty much the same percent. Interesting. I mean, Bitcoin is up on a relative basis, right? It's down 2% versus Ethereum and Cardano, which are down 4%. But it's been just sort of a meandering time. We've seen Bitcoin trying but failing to hold 50K. We've seen Ethereum trying and failing to hold this. I'm sorry. Ethereum has held its 3,000 area, but we're still trying to get back to where we were prior to that drop. And what was that? Was that from? I guess it was. I gotta zoom out now on my chart here. No, Ethereum. We've just been in consolidation station. We're just trying to get above the 3,300 area. We're trying. Just range bound in Ethereum, right? It's quiet. Ethereum's been quiet for the last like 3 weeks. Just steady range, 3,000 to what's the high of that? 30. We'll call it 34, 3,400. Just quiet. Binance Coin's having a good day. One of the few green spots on this crypto map. So anyway, we're doing these crypto updates throughout the day, every day. Just we should never have crypto too far from our minds, because it is obviously a emerging market, emerging asset class, I should say. As a reminder, these crypto updates are brought to you by Voyager. Here is the steps to get $50 in free Bitcoin. Step 1, download the Voyager app. Step 2, open an account. Step 3, deposit at least $100. Step 4, use the code ZING, Z-I-N-G. It'll get you $50 in free Bitcoin when you do those 4 steps. There's a link in the description to learn more about that. All right, it's 9:15, which means I got to wrap. I will see y'all over on live trading at Benzinga. How many likes are we at here? 427. Get me to 500, please. Thank you. You are all beautiful people. I love you. I will see you over on our next stream, live trading, starting right now.